Everyone, this is Ryan Mallory for SharePlanner.com. Today is March 8th, 2013, doing another session of live charts with you. I try to keep these under 15 minutes a piece and don't want to consume your whole afternoon with my ramblings. So what I tend to do here, go over the S&P, go over the current stocks in the portfolio, and then go over some of the user requested stocks as well. So try to get all that under 15 minutes, and sometimes we go a little bit over, and that's okay too, I guess. But those are my intentions, at least. Right off the bat, I have the Bollinger Bands thrown on the S&P 500. You'll see we've been up 6 straight days, counting today. 8 out of the last 9. That is a market that's getting very, very overextended. We're trading outside the upper Bollinger Band just a shade right now, but over the last 4 days, the 3 of them we have closed. If you're assuming today we closed outside of them too, of course, we traded outside the upper Bollinger Band. Historically, the market doesn't really do that for very long before we get a pullback. We got a small 2-day pullback there, but we've seen some bigger ones in the past from here in mid-September. So you can see that we don't get outside the Bollinger Band very much. Here again, we did it in June, did it again in July, and each one of these times, once again in late July, we've sold off. So one time where we didn't was early September. We consolidated, sold off one day, and then pushed higher. So there's a precedent that even if we don't get a significant sell-off, we're due for a pullback here in the next couple days. Getting 6-7 days straight without a pullback is very difficult for the markets to achieve. If you look at the Dow, you can see we are way overextended on this one. It's not something that's sustainable. And I know we had a good employment number this morning, and the markets are rallying primarily off of that, but overall it's not something that tends to last. So let's go ahead and look at let's look at another time frame on the S&P too. I want to look at the weekly. You can see that this has been a huge breakout week for the markets after coiling for about 3 straight weeks. Actually 4 straight weeks we coiled for. But on the other hand, the volume, being Friday, you can see that today or this week the volume is going to be very low. Looking at it on the SPY perspective, even lower. So this market rally, this is somewhat of a is a bit concerning to me. I look at the T2108 as well. Let's get these Bollinger Bands off now. I think they've served their purpose. This T2108, I'll put it on a line chart so it looks a little bit better. We were hitting new highs before we pulled back on the T2108, and this is the percentage of stocks trading above their 40-day moving average. But now what you have here, though, is you have a significant divergence where it is nowhere close to hitting those highs again. So that's another thing to be wary of. And that's what it looks like on the daily. So both time frames showing the same thing. All right, now to your to the stocks that we actually have in the portfolio right now. I added ALXN Pharmaceuticals this afternoon. I added that in the upper 91s. It's trading at 91.40 right now, so it's profitable, but I'd only see me holding this stock for max 2 or 3 days. So if we had a flush out at the close today, which I don't know if we will at this point or not, but if we do, this one could easily turn into a day trade very quick if it increases in gains for me. But head and shoulders pattern there. You got a strong level of resistance that it's traded up against and has failed to go through it. So that stock looks pretty good considering that it's oversold as well. Adobe, this one's continuing to be our knight in shining armor after breaking out of this base. It just continues to march higher. No intentions to sell that, though I have moved up my stop to about 41.10. So I don't have a lot of wiggle room at this point, but enough for it to keep on running if it decides to do so. LVS, man, it's like a love-or-hate thing with this one. We're not stopped out yet. It take a move over 53 to get stopped out, but we've been getting fairly close, and it's down today. That's good, but it's well off of its lows on the day. Overall, though, I think the chart still makes sense. You can see that there is still some heavy resistance that it just simply cannot break through at that 52.75 level. TRI. another stock just can't break through that resistance there, so it's keeping us in the game because it just can't do that. Now that one's very close to getting us stopped out, but no cigar yet. And then our other long position, silver, started off pretty bad today, but a huge recovery for this ETF. This base is just still holding really strong, and I'm quite confident, man, if we can just get over that like 28.50 level, I think this stock's going to make a run into the mid 29s, I would think. Let's look at some of your stocks here now. ISRG, I don't really see anything that's really exciting to play. I do see there's like a support level here that some traders might be inclined to try to play the bounce off, but it's not a clean support level. Honestly, if I was to play it off of that support, I'd rather it have held 518 rather than going all the way down to 514. So I'd avoid this one. I don't see a clear edge to go long or short on this one. That could change if ISRG is able to break below 477, then you might have a good short play on your hands. But that's a long time from now. So this double top, that'll get confirmed to below 477, but we need to wait for that trade to come to us rather than us trying to force it upon it. EVER. You know, I've tried to trade this stock a couple of times in the past year, and it just, you know, I think there might have been one time where I profited off of it. I can't remember for sure, but just it's not been anything substantial. So, you know, I hate seeing the thing run like it did, but I've tried it recently from the short side, and it didn't do much for me. So at this point, the stock's pretty overextended. It's gone from 1475, 1460 to 1664. So you get about $2 in gains on this stock already. So assuming that you're looking at EVR from a trade setup, I would avoid chasing after it at this point and let some additional price action come about before you reevaluate it again. ALTR. All right, you have this triple bottom in place. You got some consolidation of late. You could say above 36.07 that this thing could become a long play. I don't think you'd be entirely wrong for it, but there seems to be some resistance at this 38 level. So you have about $2.50 to play with before you'd run into some resistance. So the other thing too that I think is of interest to you, can play it at 36.07 as a entry and probably put that stop loss somewhere around 34.84 to play it safe. FWRD, Ford Air Corporation. Pardon that little message there. FWRD. Broke out, head faked, it's pulled back. I'm just not big, because if you zoom in on this, you got this bearish kicker pattern play, and that usually leads to further downside. So I'm not a big fan of the setup here. If it would have broken out and then come back and settled down a little bit and consolidated nicely, and then could have gone in on the next surge up, that would have been ideal. But the problem is it just went straight up, straight down, and there's just no conviction to that breakout. When it pulls back and consolidates some, there's still that conviction with the stock. You just have some profit taking, but still enough buying power that's keeping the stock from heading dramatically lower. You don't have that with FWRD. OABC. Omni America Big Corp. Problem with this one, and the reason why I don't want to give an opinion on this, is you only have 32,000 shares traded on this stock, so there's not really much you can do. You can see some of the quirkiness involved with a stock that is that thinly traded. When you look at this morning, where it gaps down and for a brief flash crash goes all the way down to 24.40 from $26. So you want to avoid those kinds of stocks. HFBL, same thing here. I think you only have 200 shares traded on the stock today, so I wouldn't go playing around with that one either. AIRM. All right, we got some, yeah, a little bit better liquidity. Only 200,000 shares, but still worth evaluating. This one's broken out of the consolidation. I like the consolidation a lot. The ideal would have been to get in around 44.75 and try to ride it up. Of course, that's money morning quarterback in this whole thing. But I could have been tempted. I don't like the volume though much. The volume is pretty weak on the day. Though it does seem to trade around 400,000 shares a day, which is better than what it's trading at right now. These doji candles, those bother me some too. I don't really know what's going on with that. But if you're going to play this, you'd want to wait for a pullback to this 45. Excuse me, I'm yawning and it's Friday, so $45 level, and you want it to do it in a nice and gradual manner. Last one, cap. Wowzers, what an uptrend, huh? Jeez. So since December, this thing has just been breathtakingly long. Perfect trend line going there. You probably even have it trading in a channel. Careful with these kinds of trades. They look really exciting to get into because the trend is just up, 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 up. However, these trends do tend to break at some point. So the further along you are in the trend, the more likely it's going to falter. It's been oversold for quite a long time now. Probably one of those oversold stocks for the longest period of time that you'll see anywhere. It's gone up 8 straight days. So I give this one a break. I would wait to see if you can get some kind of a break of the trend line, maybe short it if it breaks this channel, and but I'd be careful about trying to chase it long. That's going to do it for today. If you guys have any questions, feel free to hit me up. I'll be in the splash zone the rest of this day. I'm around on the weekends. You can email me at ryan@shareplanner.com, and I'll be sure to get back to you. I'm a little bit behind in my emails right now, but I will definitely get caught up over the weekend and answer everybody's emails. All right, folks, that's it for now. So long, and have a God-blessed weekend.